Hi, it's Lee, and welcome to the Tesla Economist. I'm trying to reevaluate Tesla as a business and working out exactly what it really has going for it. The demand for Teslas was not as strong as you may have thought, and we've recently seen major price adjustments in many markets as a result. On top of that, in China, the competition really is heating up, making it more competitive for Tesla. I thought now we've seen this new paradigm of Tesla, we can do an analysis on Tesla's current strengths, weaknesses, opportunities, and threats. Starting with the strengths, I think Tesla are amazing at producing EVs. As a result, they've managed to get the cost of manufacturing lower than any other EV, like for like. Tesla can also produce them faster and in a smaller footprint. Tesla is very strong in manufacturing, along with all associated vertical integration in order to save cost, hence meaning Teslas are great value for what they cost to build. Tesla's coming highly optioned with many features, some that are unique to Tesla and can't be offered by any other car manufacturer. Teslas also offer the longest range and most power, accompanied with safety. They have some of the best engineers working on these features, and it shows. Then Tesla have all their other services like charging networks and insurance, and lots of other vertical integration that reduces costs and increases economies of scale. Tesla has the largest supply of batteries compared to any other company in the world, with partners like CATL, Panasonic, and LG. The EV industry is still battery constrained. If auto manufacturers want to build more EVs, then they need to increase their supply of battery cells. Tesla have also designed potentially the best EV cell in the world and have started producing it in relatively small quantities. Their partner Panasonic builds 2170 cells for Tesla in Giga Nevada, and they receive the battery subsidies from the government. Panasonic is splitting these subsidies with Tesla, which will further add to Tesla's profits. The government are also offering a $7,500 tax credit on most Teslas sold in the US, which means Tesla's demand increase a lot due to lower prices, along with other various incentives in some international markets. Moving on to weaknesses. However, despite manufacturing at such low costs, Tesla still has to charge a relatively high price, as the company requires high margins to maintain the massive market valuation. If they were selling for similar margins as companies like BYD at the market clearing price, then Tesla's profits would fall further. It's just that Tesla are able to make their cars so cheap that they can undercut most of the competition and still make good margins, and offer additional benefits and features through software that costs practically nothing. However, Tesla can only undercut the competition if they have the demand still. Bear in mind, Tesla really have just two models competing against a lot of other BEVs now. Tesla was first to market, but there are plenty of alternatives available now. Although these alternatives will not be close to Tesla's price points, at least not the ones that legacy autos offer, it's going to depend on just how many people would rather have a Tesla over something else. The economies of scale Tesla has generated with their models is amazing. It does, however, mean that they have locked in the design of their vehicles, aside from minor facelifts from time to time. The models could eventually start to look dated compared to some of the designs and features the competition might offer. This was the biggest mistake that Henry Ford made with the Model T. He assumed people just wanted a lower cost car, but it turns out people wanted a car as part of their identity and individualism, and simply not drive the same car as everyone else. However, the Model S is well over 10 years old in design now, and still sells. Tesla have purposefully chosen designs that look as timeless as possible. Tesla have been late on delivering their promises. We've been told so many objectives that are yet to come to fruition. FSD now about 7 years late, robotaxis, the Roadster, the semi-truck, 100 gigawatt-hour year run rate of 4680 cells, Berlin and Texas volume production, a $25,000 Tesla, along with other various promises. It seems very little has actually been delivered. Tesla definitely overpromise and underdeliver. However, saying that, the Model Y was launched ahead of time, and Giga Shanghai's run rate is now about 4 times its initial claimed capacity. Tesla's solar business is also doing very little, not close to enough to have any impact on the mission. On to opportunities. As we said, Tesla is already very strong when it comes to manufacturing, but they're trying to improve on these manufacturing techniques even further, and attempting to make a volume production EV with structural battery pack in order to save the cost of manufacturing further and increase production. If Tesla can reduce the cost of their products further, then it means that they can sell their vehicles for a lower price and thus attract a larger market segment. This is paramount, considering that these new factories they have built will mean they have to perhaps double or 2.5 times as many Model Ys once they're finally ramped up. This is a massive increase in supply, so Tesla will need to increase demand in order to make sure all additional supply is sold profitably. Of course, the largest cost of an EV is the battery itself, and Tesla's in-house cell, the 4680, will be the lowest cost EV cell to produce, according to Elon, at $70 a kilowatt hour, thus potentially removing around $4,000 pure cost of the vehicle. These cells also qualify for subsidies in the US, which will give Tesla another major opportunity. Tesla will receive $45 per kilowatt hour from the government when producing the 4680s, taking the cost of the cell down to $25 per kilowatt hour. Texas has a capacity of 100 gigawatt hours a year, and the Cato Row facility has 10 gigawatt hours a year, thus implying potentially $5 billion a year in pure operating profit that Tesla would generate from these subsidies. And then we have another 100 gigawatt hour facility coming potentially from the new semi-truck factory, which will also be eligible for the subsidies. Elon actually saying that the target is 1,000 gigawatt hours a year cell production in the US, which comes to a crazy $45 billion a year in profit just from subsidies. The semi-truck facility is also another opportunity, and as it will be using 4680 cells, it should reduce cost a lot when compared to using 2170 cells, possibly reducing cost by over $100,000 when subsidies are included, implying quite a lot of profit, although we don't know how much the semi-trucks will cost yet. Tesla have the most pre-ordered vehicle in history on the lineup later this year, the almighty Cybertruck, which should have plenty of pent-up demand, even through a bad recession, and potentially a very high profit margin. Of course, we're also going to see a new model revealed soon, which is potentially a lower cost Tesla, and should be able to generate a ton of demand too. The biggest opportunity for Tesla's vehicles is, of course, FSD, which could eventuate into robotaxis. There are the other sides of the business, and currently the biggest opportunity a lot of Tesla investors are looking at is the energy side of the business, with the new Megapack facility and potentially seeing high margins for energy. Then the robots too, of course. As for threats, obviously in the Chinese market, the domestic EVs that are ramping at a considerable pace are eating into Tesla's market share. China makes cars more for the Chinese market, whereas Tesla has more a one-size-fits-all design, or perhaps more US-orientated, if anything. Although Tesla have made adjustments to their vehicles in the past to cater more to the Chinese market, such as making the Chinese Model S more luxurious in the rear, as Chinese more often have private drivers for their luxury vehicles. Now, although US legacy autos don't really come close to Tesla with their BEV offerings, they do, however, have larger battery factories in the making. Ford and GM are building massive battery factories that will likely be enough batteries for around 2 or 3 million EVs a year. Currently, Tesla is on a rate of around 800,000 in the US, although when Texas is ramped, it will be higher. This will mean that legacy are able to get their costs down for cell production, and thus their EVs will become more profitable. However, although that is enough cells to make a few million BEVs, it's also enough cells to make about an unlimited amount of PHEVs relative to demand, perhaps 10 million or so, depending on how much battery range they wish to offer. The tax credit in the US is per vehicle, not per kilowatt hour of battery in the car. In other words, for every 1 million BEVs, Ford could make over 5 million PHEVs, i.e. $7.5 billion off their BEVs with tax credits, or closer to $40 billion off with PHEVs with the same amount of batteries. Legacy can undercut Tesla with their PHEVs. This could be argued as potentially serious competition. However, these cell and battery factories are not going to be operational for another year or two. In the US, Tesla depend heavily on these tax credits for demand. Although this is meant to be in place for 10 years, it's not something they can necessarily depend on. If this was removed, then at current US sales, it could literally remove net profits by about 1/3. Although legacy auto require this more than Tesla and have very little chance of competing with ICE without it. I think 2023 and 2024 will be a very telling year for Tesla, and watching how these strengths, weaknesses, opportunities and threats manifest over that time, I think the key element to keep an eye on is supply, which will come down to the 4680 ramp, and demand, which will come down to how low Tesla's prices may end up. Then we know how low the costs can get with 4680s and new factories. We will see just how profitable Tesla can be. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.